Well, while companies line up asking Uncle Sam for money, turnaround specialist Lynn Tilton says the truth of the situation can be ignored no longer. Here now with more is Lynn Tilton. She is the CEO of Patriarch Partners. And our guest host for the rest of the show this morning is James Tisch. He is the chairman and CEO of Lowe's. And again, he's our guest host for the rest of the morning.
Good to be here.
Welcome to both of you.
Thank you.
Thank you. It's great to have you here. Lynn, we were talking just now in the commercial break a little bit about what you do. You are a turnaround specialist. You take companies and you turn them around for a living. Right now, you have about 70 companies you're working on.
That's correct.
How are they doing right now?
Well, different sectors are getting hit, in different ways. But for the most part, we've seen a precipitous drop in revenues as spending has stopped across the board. And there's a great imbalance. And so in this period where you've got to cut expenses to match the revenues, everybody's struggling. And I think you're seeing that throughout the country, is that consumer and business, spending has stalled suddenly. And all of a sudden, you've got to balance your expenses with your revenues. And so the first thing one does is cut expenses, and what goes quickly? Bodies. And so then you basically have more and more unemployment, and then spending stops. And so we're really on a downhill cycle. And there really needs to be hard work done and big decisions made to change things.
Hard work done meaning decisions coming from Congress. Would you like to see more bailouts?
Well, I think that money spent that actually drives towards a final outcome that sparks resurgence in the economy would be great. Mm-hmm. But I think that there's been very little thought before money is spent. I mean, nobody's looking from the final outcome backwards and actually using money to do things that ultimately push the economy forward. We have to create jobs. We have to get lending back. There's a credit freeze. The TAR plan did not work. I mean, no money is being lent to small companies, mid-sized companies, distressed
companies. The TARP was to stabilize the financial system, which you could argue it did. I mean, it was not to spur lending. It was to save the pipes from collapsing.
Well, I don't believe that, and that's not what was said. Frankly, you could have guaranteed all fiduciary deposits and guaranteed interbank lending, and that would have kept a run on the money. I mean, they said that this money was going in because we needed to get lending done. There's been no lending, and there was no mandate on lending. Mm-hmm. And so, you say companies can't go into bankruptcy because they can't get DIP financing. And so then what do we do? Either bail them out with money without any restructure, or frankly, what do? They liquidate. I mean, you're not even seeing the companies that are liquidating every day with thousands and thousands of jobs going away.
If there's a big 3, Chapter 11, would you be willing to go in and provide financing for an exit?
We normally take controls of our company.
Right.
And I don't have enough money to be the exit financing. But absolutely, I would always lend money to those companies that would restructure properly so they can be profitable again in the future. And frankly, these companies haven't made money in years. They've just had access to capital. We've built an economy based on access to capital. Mm-hmm. And now it's stopped. And now we need to basically restructure our economic infrastructure and all these companies that are over-leveraged. And what does that mean? It means that there's going to be pain, sacrifice, and a lot of roll-up-your-sleeves and hard work.
Right.
This is not going to be fixed with policy or theories. This is actually roll up your sleeves, gut it out. America, we're going back to work, and we're going to make less than we made last year.
Yeah, Jim, do you see the same thing in your businesses?
All of our businesses are suffering from the bad economic times. But what we try to do with our businesses is to have enough liquidity and wherewithal so that when things get bad, that the businesses can easily survive. I think one of the big problems today is that not nearly enough businesses had enough margin, enough room for error, enough ability to absorb an economic downturn. We had gone through a long period of time where we did not have a recession, or if we did have one, it was very mild, and people got seduced and thought that they didn't have to have as much working capital. Cash was a drag on earnings. And now the people that didn't have cash are really feeling the problems of that as they have to dramatically cut back or even file for bankruptcy because they can't withstand the current economic decline.
But Lynn, basically it sounds like you think that at this point there is no way to avoid this pain. We're going to go through it, and that's just that.
I think we've already tried all the magic switches, and I frankly think that we have not had a recession in a long time because we basically used fiscal tools. We brought interest rates down, we put money into the system, and I think that eventually, if you make mistakes, then you ultimately pay. And I think one of the big problems is nobody wants to look back and see what went wrong. I mean, when we rebuild a company, We actually look at what were the mistakes made. And frankly, every day we look at what mistakes we make so that you can build process around it and fix it. But I've not seen anyone willing to look to the truth of what happened over these last years across the board. I mean, we artificially inflated the value of our assets and we borrowed against it. And oops, now those assets are going down to value, maybe below fair value because of selling, but we still have leverage up to here. So what happens? All cash that comes in has to bring that leverage down. But everyone's responsible. I mean, people who bought things that they couldn't afford to pay for, companies that borrowed too much money, private equity firms that leverage things too high. I mean, there is absolutely a change, and it's not going away. And so, you know, we have to do stuff. But you know what? There's nothing wrong with that. And this is a country of great technology, great people, great companies. We have to roll up our sleeves and get back to work. But someone's got to tell people the truth so they know that.
Lynn, thank you very much for coming in today. We appreciate your time, and we hope to see you again soon.
Thank you.
Once again, Lynn Tilton.